What's going on, guys? Welcome to part 3 of market manipulation. In this video, I'm gonna go over a general plan of how to have a good plan for trading, keeping in account market manipulation. This is not a specific strategy. I'm not gonna go over the exact indicators and entry points. This is just something to keep in your trading arsenal so that you can avoid market manipulation and just making bad decisions in general. So this right here is the philosophy behind having a solid strategy. All right, so let's get right into the general plan. The first point I have right here is identify the peak formation, high or low in the weekly views. So this means when you're starting off your week, you're starting off your trading, open up TradingView, open up MetaTrader 4, whatever you use. I like TradingView better. Go to the weekly charts and recognize the highs and lows. Identify setups within this context, specifically looking for the most pristine setups where there's maximum opportunity for scaling in heavy and trading with high lot sizes without being concerned about losses because of the size of your stop loss and the confidence you have in your setup. This basically means is look for good setups, don't take bad setups, and be confident in your setups. This just means you need to have confidence. You won't have confidence until you have a solid strategy. You won't have confidence until you actually follow a game plan. You won't have confidence until you stop guessing all the time. And you won't have confidence if you have bad risk management. So all this means is once you have good setups, a good strategy, good mentality, suddenly things will get easier. You'll have more confidence, and you'll see that the trading process will become both less painful and more consistent. All right, let's go over the rules to profit. Stop trading every day. Honestly, you really only need to trade 2 to 3 days a week. And honestly, there are only about 2 to 3 days a week they should be trading. Tuesday, Wednesday, Thursday, and honestly, Thursday is barely worth trading a lot of the time unless something's going on. So realistically, you should only be trading about Tuesday or Wednesday. Show up every day, but if there's no setup, then there is no trade. Just like how I said in the end of the last video, and I think maybe the beginning of this video, there's not always going to be a setup, and don't force a trade. If there is nothing, just move on. Live life. That's what Forex is about. I'm out here in Hawaii, and honestly, I'm glad when I don't have to spend time looking at the chart. I'll spend doing it for maybe an hour or two a day, 2 to 3 days a week. Then I'm off at the beach. I'm off skimboarding. I'm off in the jungle. That's what Forex is about. When I'm older, I'll be able to spend time with my children, my family. Don't sit in front of your computer all day making money. What's the point of making money if you're not doing anything fun with it? Learn to become highly selective. Just like your partners in life, the friends you have, the people in your life, you need to be selective about the trades you put into your life. You don't want low vibrational trades. You don't want trades bringing down your consciousness. You want high consciousness trades. You want trades that you know have a high success rate. Trading hours should be from the end of the Asian session into the London session, open for about 4 hours, then take a break, and look for several reversal setups, the opening of the US session for 2 to 4 hours. So this is just where the most of the consistent volume is. I don't follow this every single day. I prefer to trade the London session, but this is the best, most efficient time to be trading. So once the Asian session has ended, by the way, never trade during the Asian session unless you're a masochist. Once the Asian session is over and the London session is opening, that's a good time to start trading, find setups. Then the second best time is the beginning of the US session when there's a London-US overlap, and that's actually the peak time to be trading. Now, that might be an awkward time for you. For me, that's about, I think, 3, 4 a.m. Hawaiian time, so it's a little awkward for me. But if you're in, let's say, I don't know, California time or New York time, still pretty early, but I think it might be a little easier for you guys to do that. But here in Hawaii, London session is best for me. All right. For trading, always enter positions in their consolidation levels where possible. This should be done when there have been a number of signals or triggers at the time when you believe that the high of the day or low of the day has been or is forming. So when you see, for example, the top of the M or the bottom of the W, where you see price consolidating, or you see where price is sticking close together, or where the wedge is forming, where you see a lot of dojis, a lot of pin formations, that's the best possible time to enter in a trade because the trend hasn't begun yet. You want to get in pre-trend. You want to be a trend setter, not a trend follower. Be a trend setter. Invest when there's consolidation going on. Invest when you see the high of the day or the lower of the day has been or is forming. If you do not, if you take trades after prices begun moving, then you are effectively chasing the trade, which has a negative effect on the size of your stop loss and therefore the size of your trade and therefore profitability. So if you miss the boat, if you're late, you're swimming out in sea trying to catch the boat, what are you doing yourself? You're hurting yourself. You're going to have a crap stop loss. You're going to have a crap profit. You're going to have a crap win-to-loss ratio. And guess what? You're probably going to be more emotional about it because you got in during emotional conditions. And now you're going to think less clearly about it and probably just close out for a loss before it shoots up into profit. So moral of the story is, do not invest when the trend has already been set. Invest before the trend. Ensure that you only trade on the basis of closed candles, preferably with multiple confirmations. So this means if you have the confirmation, but you should probably wait for that candlestick to close. For example, let's say using the MACD or stochastic or a moving average, you see them about to cross over, you're about to take that crossover trade. They haven't quite yet. Not until this candle closes. Do not enter until that candle closes to prove that there has been a crossover. Because more times than not, but you think it's going to close, it closes, and then the moving averages, the MACD and stochastic, don't cross over and actually keeps going down in the wrong direction, even though you're in a buy. Only take trades at the peak formation highs and lows on an intraday cycle. This will be even stronger signal if you also lined up with the peak formation high or low in a 3-day cycle. All this means is recognize the bigger picture. Try to figure out where the bigger trend is, where the weekly trend is. That's what they mean by intraday, what takes place over a series of days. And we can do more big scale. When we're looking at the weekly, when we're looking at the daily charts, you'll make less mistakes about these big reversals. So if you keep your head in the 1 hour, 30 minute, you're not going to see these big formations. That's why it's important to zoom out and go into the bigger time frame so you don't get screwed over. Rather than aiming to make many pips per day to achieve your income targets, use a method which is highly reliable and ramp up your contract size. So this just means boost your confidence, have a good strategy, do it on demo, have a good track record so that you can be confident in increasing your lot sizes. You don't need to catch 1,000 pips a day, you know, 1,000,000 pips a month to be rich. You just need to be able to catch consistent pips. I know one of my Forex mentors, he was telling me about a guy he learned from. He lived in the attic of a barn, had a fat monitor setup, and he would only aim for 3 pips a day. But he would make $300,000 a day. $300,000 a day off 3 pips. Now, I'm not recommending doing that. He had millions upon millions upon millions to leverage to do that. Most of you guys watching this probably don't. So that's just an example of people that know what they're doing. They just increase the contract sizes because they're confident in their setup. While learning, aim for 50 pips a day. So when you're on your demo account and you're trying making these trades, 50 pips is all you need per day. If you don't hit 50 pips, oh well. If you do hit 50 pips, close your laptop, put your phone down, go hang out with your family. It's done. If you're confident with your setup and your level of accuracy, you can afford to trade heavily. So just like I said, once you're in the groove of things, once you're not a broke, homeless person or whatever, you can then increase your trades, increase your contract sizes, and trade a lot more. But in the beginning, it's very tempting to just go ham on it. But let me tell you, that's the easiest way to lose all of your money. When I first got into it, I was no lifing it. I was staying up all day. I was doing all, staying up all night, doing it all day, just not healthy. Took a toll on my mental health, and I lost a lot of money doing it. When I started to step back, do it more as a casual thing, do it more as something to support me instead of to drag me down, that's when I started seeing results. Most people only trade smaller sizes because they are only guessing at the direction the trade is going. So basically, you see those people putting those micro lots, even though they said they've been trading for 5 years, they're still putting micro lots, mini lots down because they're still basically guessing. They change their strategy every few weeks because they're not satisfied with it. Once you have a strategy, it doesn't have to change. You can tweak it here and there, but people that put in those small lot sizes so often, they honestly don't have a set strategy they've been using for years and years and years. All right, so here's a suggested routine. The first thing you should do when you come to the office is check the news. You can go on Forex Factory. You can go on Daily FX. Just Google Forex news and a bunch of economic calendars will pop up. Make sure nothing big's going on. In the beginning, try to avoid news events. So if you see a high intensity news with a red flag or red circle or high volatility warning, just don't trade in the markets during that time until you know what you're doing, because there's a lot of people that can make good money off of it. But let me tell you, if you're new to Forex, just wait until you're a little better to start trying it. It's an emotional roller coaster. Having checked the news, you should avoid trading non-farmers payroll, which is a big news event that happens once a month. Avoid trading the federal chairman's speech is running. So again, you can just check to make sure if any federal chairman is speaking. Also avoid maybe when Trump's speaking. It can get pretty volatile when Trump's talking about news lately, so just be warned. The market only has three conditions. They are consolidation and accumulation, which anticipates a stop hunt. The stop hunt, which means you should be waiting for a signal or a setup. The trend, which means you want to take a trade and count the levels, maximize profit. Before you hit the 15-minute trading window, look at the hourly chart and verify the count and particularly observe the highs and lows. Basically, again, start on the higher time frames and move down to the lower ones. In a 15-minute trading window, perform an intraday level count. So this means to zoom out and try and go over a span of 3 days and try to see which consolidation level it's at. Wait for or look for a channel of less than 50 pips in the Asian range or similar. Identify a price moving out of its range using 3 swipes. All this means are 3 movements in the wrong direction. Look for evidence of an M or W formation that takes somewhere between 30 to 90 minutes to develop. So that just basically means the M's you'll be looking for in that 15-minute time frame will typically take about 30 to 15 minutes to start developing. All right. For additional confirmations, look for evidence that is supported or resisted by pivots, average daily range, high lows, or EMAs. Basically, don't just rely on one confirmation or 2 confirmations. Use as many confirmations that you know how to use, that you know relate with each other. Pull the trigger, place the stop loss, and take profit. Don't hesitate. If you feel like you have a good setup, enter. Don't hesitate. Don't wait. You'll regret it if you do. If you lose, learn a lesson. If you won, good. But just don't hesitate. Pull the trigger. Plan for additional entries and pull the trigger when the relevant criteria have been met. These entries may be taking form of TDI triggers. So basically, you can enter in multiple positions on the same currency pair when you have a good setup. Let's say you enter a position in level 1, then moves up to consolidation level 2. You enter another position, moves up to consolidation 3. You close out. You just enter multiple positions, knowing how to count those different consolidation levels. As these trades progresses, continue to count and try to stay with the trade while the count remains valid. So basically, just don't sleep on the trade. Check it here and there. Make sure it's going in the right direction. If it starts to look funky, just close out. When there is evidence that the move has reached level 3 and shows choppy behavior and new reversal patterns, exit the trade. All right, so that is basically it for this section of market manipulation. If you haven't already seen my other strategies and guides, highly recommend you go check them out. They'll be much more relevant to you now since you know the basics of market manipulation. There's a lot more to go over in market manipulation, and I'll make more series going over that. But for now, thank you guys for checking this out. If you have any questions, feel free to shoot me an email, put it in a comment. I have all my information below. Thank you guys again, and I hope to hear from you soon.